Welcome back to Midcap Radar. Well, the choppiness continues as far as the markets are concerned, but one particular company that we are looking at is one from the infra space. J Kumar Infraprojects yesterday reported a steady set of Q1 numbers. We're joined by Nalin Gupta, who's the MD at J Kumar Infraprojects. Thank you so much, Mr. Gupta, for joining us. Especially when we are looking at Q1 FY26, what is the kind of order inflows that you received? And going into FY26, are you on track for 8,000 crores of inflows that you had guided the street to at the end of Q4?
Well, so the company bagged orders worth around 4,700 crores in FY25. And in the Q1, we haven't clocked any new orders, but we are very hopeful of bagging orders worth around 2,000 crores approximately in Q2 in this coming quarter. And overall, we look at bagging orders worth around 6,000 crores for this financial year, closing our order book close to 21 to 22,000 crores for FY26.
Mr. Gupta, you spoke about receiving 4,700 crore worth of orders in FY25, which was lower than the guided figure of 6,000 to 8,000 crore rupees, right? What was the reason for that? I'm asking you because do you think those could be some of the issues that you could see in FY26 as well?
Well, so that's why if you look at the order book, we have been mentioning about 6,000 crores and not 8,000 crores because what's important for J Kumar is the bottom line. So for us, we are very particular that we bag orders with strong bottom lines. We don't intend to take orders just for top line. So, and J Kumar sitting at an existing order book of around 21,000 crores is quite a robust order book to take care of my top line and a decent growth of 15-16% for the next 2 to 3 years. So if you look at FY24, J Kumar bagged orders worth 10,000 crore plus. So it with the current or existing order book itself, we don't need to be going below the, we don't need to underbid. So that's how, means I would say that we bagged an order book of 4,700 crores. And this year also we'll bag orders worth around 6,000 crores. So we are pretty comfortable in terms of the order book. And there was some slowdown in terms of the government inflow of orders. So I would say that with this current scenario, we are very sure that around 6,000 crores worth of order we should be able to bag in this coming year.
Okay, Mr. Gupta, that is very clear. So 6,000 crores of order inflows, fresh order inflows is what you are now penciling in for FY26. Well, at the end of FY24, I remember seeing most of the investor presentations. You had given us a couple of key guidance or key parameters to track. Number one was the order book was expected to be in excess of 25,000 crore. You were targeting $1 billion of revenues, and you also had an operating profit margin expected to be in the range of 15 to 16%. Are you now tweaking that guidance?
Well, so let me tell you about the top line. Firstly, as you have rightly mentioned, we had given a target of $1 billion revenue company when the dollar rate was 75. But I think you will appreciate the dollar rate has gone up to 85. So we are surely in terms of the earlier guidance that we have given, we stick to it. And this year we expect a top line worth around 6,500 to 6,600. So in FY27, we should be almost close to the target that we had given when the dollar was 75. With regards to EBITDA margin, yes, the company has been already making in the Q1, if you look at the margin, the company has made a EBITDA margin of 14.6%. So which is a growth of 15% on the previous years. So we have been growing in terms of the EBITDA margin also. And our continuous endeavor is to ensure that in the coming 6 to 8 quarters, we should be able to increase this by 1%, taking it from 14-15 to 15-16%. And that would be due to the operational efficiency that the company has been following. So we are pretty much comfortable that we should be able to achieve this.
Got it. That's on the margin number where you're expecting a 1% improvement because of operational efficiencies. So then let's talk about some of the big orders or big pipeline plans that you have. One of them, of course, is Goregaon-Mulund Link Road. What is the percentage of completion here? And in terms of margins, how do you look at this particular project? I know we've spoken about it earlier, but since then, numbers in terms of input prices have changed a lot.
Well, so I would say that GMLR is a project, one of its kind. It's one of the largest diameter of tunnel to be constructed in India. and the project is well on track. We have already set up the entire casting yard for casting of this tunnel segments, and we have already casted more than 200 rings by now, and the casting yard is fully functional. The site is fully prepared. The TBM, there are 2 TBMs that we are procuring for this project. One of the TBM has already reached at job site around 60%, and the break bulk push we are expecting in the first week of August. Even the second tunnel boring machine is ready for its FAT test, that is factory acceptance test, which should happen in the first week of August. So my entire team related to that project would be going for the inspection. So and the margins on that project being a very complex job, we are very hopeful that we should be able to make a good set of numbers in terms of top and bottom line there.
Thank you so much, Mr. Gupta, for joining us. It's a very short conversation this time around, but we hope to get you a little sooner. Some of the important projects, especially as a Mumbaiker, is something that we are looking forward to early completion. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.